This is the briefing for Wednesday, April 29th. I want to start tonight a little bit differently than I typically do in these briefings and start with a chart that I think is probably the most important. I've referenced it earlier this week also. This is a chart of volume, and volume drives the market. Volume is the fuel that drives the market. Without any volume, it's not going to go anywhere. So depending on what that volume is, whether it's high volume, low volume, up volume, down volume, can tell us a lot about whether the strength of a financial instrument is strong, or I should say the strength of the trend is strong and strengthening or weak and weakening. Doesn't matter which direction it is. Now, this is NYSE volume right here, total volume on the NYSE. So you can see that we are really at lows that we've not seen for quite some time. But the breakdown of volume, in other words, is this up volume or down volume, is seen in net volume. And that basically is up volume minus down volume. So you can see here that the breakdown of this volume all through here, this total volume, has been a deterioration in terms of what is up volume minus down volume. So there is beginning to become more down volume than up volume, and you can see even in today's trading we were negative net volume, suggesting there was more down volume than up volume. And what's surprising to that is that right now anyway, we're not seeing a deterioration in the price of the indices that typically I think we would see in a typical environment that is not based on news events. This is NASDAQ volume. The same thing here at lows. We did get a small tick up in volume today, but look at net volume. Net volume is absolutely collapsing in terms of the NASDAQ. So basically what this is telling us is that there's more fuel going into the engine to the downside than there is fuel going into the engine to the upside. In terms of total volume and net volume. Now, the real question here is that if we look at this, is total volume that is so low telling us that potentially we are going to see a rally because there's not much buying, and looks like there's more selling of positions right now than there is buying of positions. So when we see this could basically tell us that we could be reaching a point of being oversold in terms of volume, as opposed to building a trend to the downside. And that is typically important, because if you have volume in the direction of a trend that's increasing, then that would suggest that the trend is going to continue. If you have volume in the direction of the trend that is decreasing, that would then suggest that potentially it is becoming a drag on the market, and that the instrument is typically going to reverse its trend. So here we are, basically this is a daily chart of the spiders, and you can see we broke out of this area of rotation that we've been in for quite some time. So the question is the trend up or down? And the trend is basically has stopped. It was to the upside, but it has stopped, and it is now in a rotational pattern. So it's going to be very interesting and important. And as I discussed way back at this point in time, that when we get a breakout, you want to see volume increasing to support the trend. We did not see that. What we saw on the spiders, and this is spider volume, I should say, you can see that it is declining as well. We also have 52-week highs minus 52-week lows are declining, and breadth in the NYSE is declining also. So you can see those trends. Net volume on the NYSE is declining, as I showed in the previous chart. In the Qs, we're looking at basically the same thing. You have an extension outside of this resistance area that is now support, and you can see the trend going higher, but you can see what's happening with volume, that volume is falling off and net volume is declining also. So what this tells us is that or I should say what it tells me, is that this part of this trend is not strengthening, it's weakening. And the risk to the downside is certainly present for sure. So volume, if volume is the fuel that drives the trend, then this trend here on the breakout outside of this area of rotation, this upper extreme, then that is certainly looks like it's running out of gas, and potentially we're going to see some type of potentially greater degree time and price counter trend rotation, maybe even to test this now support level and or break it and put us back into this area of rotation. In terms of the Russell or the IWM, we have basically the same thing. You can see that we got this area of rotation. Now we are now testing this 270 level, and you can see volume in the IWM decreasing, breadth in the Russell decreasing, and net volume in the Russell falling as well. So basically what volume is telling us, and if you believe that volume, you need volume to drive a trend, then what is telling us is that this consolidation, this rally that we've been experiencing for the last couple weeks is getting weak and weaker with each day. With that said, I'm going to be watching what happens at 270 with the IWM, trading through that, especially if we see volume beginning to increase. That would be significant. Looking at potentially this area right here, the low of yesterday, 652 in the Qs, to see a potential test of this 640 breakout area. And then in the spiders, looking at potentially if your risk tolerance is a little bit higher, to the 707 area, if not potentially the 702 area, and then below that the 700 area for the spiders. So basically, and now this market is driven by news, and we have to always keep in mind that there is always a higher probability that price is going to correct to the internals, especially volume. However, there is a smaller percentage of time that the internals will correct to support price. Typically, that happens around a news event that changes the perception of value on the part of traders and investors. So I think that unless or until we see some type of news event that changes and gives fuel to this rally, that we're going to see some type of potential move to the downside. The only thing we can do now to determine whether that's happening is look at shorter term charts to determine if those shorter term support levels are being broken, then they would migrate into an intermediate term time frame support level, which would then migrate into a longer term support level, as I've discussed in these daily charts. So it's going to be interesting. I'm keeping my eye on volume very, very carefully and looking especially at what happens in the breakdown within volume itself in the net volume figures. Have a great night, and I will pick this back up again tomorrow.